Our next topic is how to write a valuation report. And in that context, what are the do's and don'ts for writing a valuation report? So, what is that we should do and what is that we should not do? So, let us start with what is that we should not do. So, number one, never start valuation before understanding the business. Uh, Obviously, not advisable and perhaps not possible also, but sometimes someone out of overconfidence can venture into it, and chances are that he will face difficulty. So that is first don't, that is never start valuation before understanding the business. Number two, never start with financials. So unless and until you have understood the industry, the company, and is working, uh, starting straight away from the financials is not advisable. Number three, don't give too much focus on the past. Leave that to the historian. There is no doubt about the fact that past is history is important, past is important, and but at the same time, the valuations of the company do not lie in the past. The valuations of the company lie in the future, and therefore it is advisable to not over focus on the past data. Take past information into account, of course. Do give due weightage to the past information, but don't over focus them. What are the do's in writing a valuation report? The do's are: number one, be brief and concise. No doubt, your valuation report has to be comprehensive. It has to cover each and everything. It has to be fully understandable and should be comprehensive and should be substantiated by all means. But be brief and concise. That means there is no need in making the report superfluous. तो बहुत ज़्यादा एक ही सेंटेंस को बार बार इनकॉर्पोरेट करने की ज़रूरत नहीं है, एक ही चीज़ को बार बार रिपीट करने की ज़रूरत नहीं है. मेक इट ब्रीफ एंड कंसाइज. That's number one. Number two is put relevant information from the point of view of investment, and that is what is recommended. Number three, should contain graphs, tables, and charts. And why is that the valuation report is recommended to incorporate graphs, tables, and charts? Because graphs, tables, and charts improves the readability of the report, readability of any document for that matter. And that is why the do's include that you must incorporate graphs, tables, and charts in your valuation report. Number four, the graphs, tables, charts should be analyzed and not described in text. So when you are giving a graph, when you are giving a chart, or when you are giving a table, there is no point in narrating the graph. What is more important is to analyzing the graph as to how will you derive conclusions or decisions based on the graph, and that is what is recommended as do's. Number five, analysis should facilitate, enable in investment decision making. As we discussed on the very first day, and in the very first session, and I'm sure all of you will remember, we started with the discussion as to what is value, and we understood value is nothing but utility of an asset or a liability. Then we understood what is valuation. Valuation is nothing but quantifying utility of an asset in money terms, and that is valuation. And then we understood why do we do valuation, and we understood very clearly we do the valuation because valuation is in the heart of every decision that is taken by the corporates. And same is what we have to think of here at the last point, second last point. Our analysis should facilitate or enable in investment decision making, and that's your number five. Number six, assumptions should be stated after being validated. As we discussed little while ago, whatever assumptions are given to you by the client, it giving the assumptions is responsibility of the client. It's not our responsibility as a valuation professional. Giving the financial projections is the responsibility of the client. It is not our responsibility to do the financial projections. But our responsibility is the financial projections which are given to us are validated by us. The assumptions that are given to us by the client are validated by us. So these are some of the do's and don'ts that we need to take care in preparation of a valuation report. Next is follow the deductive logic path to understand the business of the company by going through industry report, composite company website, equity research report. So basically what we are saying is as a valuation professional, before we start valuation of a company, we need to carry out something which is known as GIC analysis. And I'm sure you would remember as we discussed sometime back, what is the GIC analysis? GIC analysis का मतलब ये है to understand the global economy, to understand the local economy, that is the economy of the country. Number three, to understand the industry to which the company that you're trying to value belongs. And number four is to understand the company itself. And that is what is meant here by this point that we are talking about. Number three, prepare a plan on the research objective and approach. And the last point is identify time schedule and milestones. So this is what we have to do in preparation of a valuation report. We also need to identify the parameters to be taken, as we discussed a little while ago in the context of the chart that we saw. We need to do the segmental analysis, competition evaluation. So when we talk about the competition evaluation, maybe what we are talking about is that we need to do Michael Porter 5 force model. माइकल पोर्टर का जो 5 फोर्सेस का जो मॉडल है, वी नीड टू look at the industry from the perspective of Michael Porter's 5 forces model. And what these 5 forces are, since we are discussing, I can mention it here. I hope I remember them. One is entry. Is the entry into the industry easy, or there are restrictions on the entry? Number two, the bargaining power of buyers. Number three, bargaining power of the customers. And number four, inter-company rivalry. That means जिस इंडस्ट्री में ये कंपनी है जिसका आप वैल्यूएशन कर रहे हैं, उसमें इंटर कंपनी राइवलरी कैसी है. एंड नंबर 5, थ्रेट ऑफ सब्सटीट्यूट्स. एंड दिस फ्रेंड्स इज योर Michael Porter's 5 forces model, and these are the 5 forces of Michael Porter's 5 forces model. So what we need to do when we are doing the valuation of any client, we need to test this company on the Michael Porter's 5 forces model. How does it help us? It gives us an idea as to where does this company stand as far as the industry is concerned. And then decide the valuation methodology that we have discussed. Study the capital structure of the firm and notes to accounts. Arrive at the growth rate and discount rates. Calculate the value of the company. Validate the value, and then you prepare the valuation report. And this is the process that we would follow for preparation of valuation report. What can be the sources for preparation of the valuation, for doing the valuation as well as for preparing the valuation report? Now, in the context of American companies, there are many SEC filings. There's a form called 10K, 10Q, 8K, and some other firms which American companies are required to file with Securities Exchange Commission of America. So likewise, in India also, the companies which are listed on stock exchange need to file many disclosures from time to time with SEBI and also with the stock exchanges. So that can be one source of information about the company. News items, company website. So the company that you're trying to value, a lot of information about this company will be available on the website of the company. Go through the annual reports of the company, read the chairman's report, look at the management discussions and analysis, look at the balance sheet, profit and loss, cash flow, and notes to accounts. And then research reports, as we were discussing. So a lot of investment analysts who are there in the stock market, a lot of financial analysts who are there in the stock market, they do the research on different companies so as to help their clients make more profit by investing or divesting in different shares. So, and most of these reports are available generally in the public domain. You can make use of them as a source of information about the company. Company press releases that the companies come out with time to time. Industry association forums. So you have Maratha Chamber of Commerce, or you got a FICCI, or you got a ASSOCHAM, or you got a CII, or you got many export organizations. You got PSD Chamber, you got in Indian Merchant Chambers. So there are many such business associations, and these business associations also compile a lot of reports about the respective industries to help their members. So some of these reports can also be obtained and made use of in doing the valuation, and also in preparation of the valuation report. And finally, of course, you have many of the government sources. So Reserve Bank of India website is a huge source of information. Stock exchanges, huge source of information. SEBI, huge sources of information. And of course, then you got the many of the government agencies. They compile a lot of data, a lot of statistics, and those informations can also be used in doing the valuation and also in preparation of your valuation report.